Welcome to the Tech Panel.
1, 2, 3, 4.
The podcast where tech minds meet.
Oh, hey, before we get started today, don't forget to subscribe and ring that bell.
Welcome to the Tech Panel. Today, we're excited to have Michael Cotton, Chief Product Officer at Optio Capital, joining us. Michael has a strong background in blockchain and digital innovation, and he's here to share insights from his journey with work at Optio. And welcome.
Thanks, guys. Appreciate it. Thank you for having me.
Yeah, it's a pleasure having you on board. So walk us through what exactly is it that Optio Capital does? What kind of value does it offer to the market? And what is your unique spiel?
So we are a blockchain investment fund is, I guess, the core, like where you sort of drill down deeper in terms of what niches. We then go into very specific niches within the blockchain space. So for us in particular, our current fund that we're launching at the moment is Bitcoin specific. When we say Bitcoin specific, we aren't saying Bitcoin itself, but everything built on top of and around Bitcoin. So the application layers and the scaling layers built around Bitcoin itself. So that is our core sort of mandate and investment thesis. In terms of what we offer, like I think the core value we offer to the companies we invest in, and I suppose in essence this is what LPs are looking for as well, is one, our network within the Bitcoin space and within the blockchain space. And then both AJ and I, co-founder at Optio, we've both been founders before. So for the companies we invest in, we understand what they're doing. We understand the journey they've been on. We understand the struggles. So for the companies we invest in, our core value proposition is we are fellow founders that understand your problems and we're here to help. So that, and then the network we have is also the same network that they get to leverage as well. And by having a really specific and quite niche mandate, it means most of the companies we invest in actually have some sort of collaborative synergies because we are so targeted in what we invest in. So if you can imagine, everyone we invest in generally will have some sort of collaboration or work they can do with some of the other companies within the portfolio as well.
So what was the point in your career that went, this is the direction we want to go? This is where I want to, my career to go into. So with the blockchain and the crypto and whatnot, how did you get to that point? What was the deciding factor?
Yeah, so we as a business originally started a jewelry business that really morphed more into a gold company, which was just circumstances of organically in business and different opportunities come up. And exactly. So we still have a really strong presence. That my traditional business still has a really strong presence within the jewelry industry, but gold is our core focus now. But really, as a company, along with my business partners, we're essentially corporate venture capital style investing in the sense that we were investing into companies that were parallel to us and we could bring value to by absorbing them into this sort of greater organization. So we were investing in many ways at the time, and we were applying all the traditional investor logic of, looking at these different businesses, looking at how we could help grow them and scale them, and looking at what the opportunity was in the future. So we had essentially started being investors in many ways from sort of day one. Where that sort of transitioned is we'd always done that with the idea that it was very much complementary to our existing larger organization. And where that really changed was we were approached by one of the big investment funds in Australia that were interested in digitizing gold. So the conversation around what did blockchain technology overlaid into something like the gold industry look like, it sort of took us down the rabbit hole of, okay, well, let's look at blockchain. To be honest, we had been approached previously with similar sort of thinking, but those people who had approached us didn't provide enough sort of logic and explanation and why blockchain for us at the time. That was sort of like 2013, 2014. Whereas in 2015, when they came to us, they actually were able to give us really articulate reasons as to why this is early stage internet, why this technology is going to be the future, and why it's something we should really be putting energy into. So that took us down the blockchain rabbit hole. This is a longer explanation that you maybe expected, but this took us down
feeds us the information.
That took us down the blockchain rabbit hole. And from there, we started just investing into companies, which was like, look, let's get our feet in the water, let's get our toes wet and just start actually deploying some capital and see what happens. And, we've very much been learn by do. So by investing, we actually were immediately in the deep end. We were talking to teams, we were getting their insights into what's happening into the market. And it was a really great way for us to get involved. We did really well and we're really successful in those investments. Australia's actually got a very, very strong blockchain scene, and particularly in those days was very much leading edge of DeFi and a lot of these other sort of things that have become sort of 101 of blockchain now.
All right, just explain for the audience really quickly, what is DeFi? I'm sure that's
gonna
a new
ask the
term.
same thing.
Okay, yeah, good question. So decentralized finance. So it's essentially replicating the financial system, but in a decentralized way, which sounds very very flimsy and probably not a great explanation. But what that basically means is removing as much of the trusted middlemen as possible, or as much of the middleware as possible, and replacing as much of that as possible with automation and connecting peer-to-peer. So the idea would be traditionally right now, if you deposit money into a bank and then they on-lend it, they act as the sort of middleware to it and take a very large, vast majority of the value in between. Blockchain allows us actually to automate that process, to make it trustless and not require trusted third parties, and lion's share of the value created actually goes between peer-to-peer. So instead of actually being kept by this intermediary, if you're providing money into the lending market on the blockchain side and I'm borrowing it from you on the blockchain side, you actually get 90+% of the interest. The automation software might keep even as little as 1 or 2% of the actual interest. So it really changes the game, which generally means lower interest rates for those borrowing and higher returns for those providing.
So where do you see, so in regards to traditional banking and financing, and then DeFi, where do you see it going, and how, like, I'm assuming you're saying it's going to go more that direction opposed to the traditional way. And, we hear a lot in the, socials and just the internet in general about all the chatter and whatnot of what's going on. But do you see it, and in what time span do you see this sort of overtaking the traditional methods?
Yeah, so for example, like USD transactions on chain surpassed Visa in this last 12 months, Visa and MasterCard combined. So we're actually seeing things like fiat transactions in US dollars now outpace things like the traditional market, which is a lot of people don't realize that that's actually taken place. The main reason is, I don't know if anyone's done an international transfer lately, but the main reason is if you want to send US dollars to someone else and you do it on an efficient blockchain, it's, sub 3 seconds and costs you 1,000th of a cent. Whereas you do a Swift transaction today and it's certainly nothing near that. And sometimes it seems arbitrary. It might be $20 and take a day, and that doesn't seem like a big deal. But when you're talking about billions of transactions and you're talking about a multiple of cost, it's a huge percentage difference. So, we are already seeing in many ways blockchain and DeFi is a part of that, but blockchain outpace the market because of the value it offers. I think in terms of DeFi, like the core elements that are probably obstacles currently for that sort of extreme growth or that majority adoption would be people not necessarily being ready for complete sovereignty of their net worth. By coming on chain and bringing your money on chain, you become responsible for it, and responsible to the nth degree, in that if you lose access to your wallet, in most of its current form, if you lose access to your wallet, your money's gone. So most people aren't really probably ready for that responsibility. I think it's a responsibility we should all be ready for, but it's not necessarily a reality for most. We've got a lot going on. Being able to keep that really safe and technologically safe is something some people do feel uncomfortable with, which I can appreciate.
So how does the average person that, our listeners that know nothing about this and are like, okay, this sounds like it might be a good idea for me. How do they start this?
Yeah, the technology is progressing in that we are seeing a lot of great teams build products that will make that process easier and feel less risky, in the sense that there will be sort of fail safes for accessing your funds if you lose access. So similar to, you have recovery methods within banking and you have recovery methods within Google and all these kinds of things. There's similar elements being deployed within the blockchain space to really, abstract away a lot of the hard things you have now, and also make people feel like, all right, even though I do have to have some responsibility here, it's not the same as if I lose these keys, everything's gone. I actually have some options of recovery, same as you would with a bank or anything else. So I think for most people who are really hesitant, like, that will change things a lot and will make it a lot easier. In the meantime, like, the best thing I think is just to go out there and find people that are influencers out there in the space, or people that are building great products, and follow them. Generally, I find that finding great people you think you like and that you trust, which I think is something that's also missing a lot in today, is we don't know who our leaders are in reality. So finding people you think are knowledgeable, that you trust, that you can follow along with, I think is a really great way to sort of get your feet wet. And try with $10, if you want to just, like, as I said before, I'm a big believer of learn by do. get $10, start playing around with it, do a few things, see what happens, and that'll make it a lot
See
easier.
if it's for you. Yeah.
100%. And that's the best way to learn. You lose a couple of bucks, it's not a big deal. You've probably learned an incredible amount for that small cost.
Yeah.
There's a lot of nuances to blockchain that you're still working through, but also anyone who used internet in the early days will understand the problems were similar. Like, it was a nightmare. It was chaos. It was hard. Everything was painful. Even when it was good, I still remember waiting for the dial-up. I still remember,
And
you
then
know, that
someone would
noise.
call you,
Yeah,
and it was
exactly.
like,
Those were
oh,
the
that's
golden
it.
years.
Yeah.
What do you mean it was painful? I was
Floppy disks that had 1 megabyte space, you know,
Oh my gosh,
like,
yeah.
so
old floppy disks.
and that was when it had become easy, right? That was prior to that, it was
Yeah.
incredibly hard. And we're seeing the same with blockchain. If you actually look at the adoption curve, it's almost mirrored with the internet adoption.
Oh, wow.
So if you actually watch the two on a chart, time year by year, it's almost identical.
I find something that's really important for the average listener is understanding what are the tangible ways that they can start taking advantage of the system now. Everyone always goes straight to investment, but I feel like using the word investment in anything scares away a good like 60 to 70% of the audience, because they're not even investing in the easiest way to invest, which is shares. It's a known commodity. It's studied. It's trusted, and they don't even want to touch that because that's too scary. Investment in Bitcoin and using blockchain is one thing. Is there any other way that you can say, like, look, if you don't want to use it for investments, here's some tangible examples of how you could take advantage of this technology in everyday life?
Yeah, I think people, it'll be more that they won't specifically go out there to do it. I think they'll all of a sudden be doing it and not even realize it. So I'll give you a really good example, like Travelex in the US. They're now digitizing. They're into the millions of plane tickets now on blockchain technology, with the intention that you could, for example, resell a plane ticket, which traditionally has been essentially impossible. But Travelex has got now several of the major airlines. But a lot of what they do is abstracted. So you wouldn't even necessarily realize, you just think you bought a plane ticket, now you can resell it. You wouldn't actually even necessarily know that you're actually doing that on blockchain technology. And I think it'll be very, very similar. I often sort of refer to it like the SSL, your security certificates in the web, where you see, you know, your little symbol that tells you you're on a secure website. I think we'll probably see something quite similar where you'll see a little chain symbol, which is, you know, whatever you're doing is actually secured by blockchain technology versus you actually specifically doing anything that would make you realize you're using blockchain. So I think we'll see things like identity. I think we'll see things like tickets to concerts. I think we'll see things like specific documents like contracts all on chain. You won't necessarily realize it or have to do anything specific to use it, but they will all end up being on blockchain technology. And there's a lot of really strong reasons for that, which is proof of provenance, proof of originality, all of these elements that make blockchain incredibly efficient to use compared to the systems we have now, which is the only real reason to adopt it is if there's actual real value gained.
Sure.
And that's really what blockchain does actually offer.
Is there any way where you foresee this clashing with what at least I understood for the benefit of using something like Bitcoin or other digital currencies is anonymity, right? I feel like this is going directly against that mindset of the reason I want to use this is because I don't want to be tracked for the way I use my money. It's not a name behind it. It's a number, and no one knows what that number is other than myself. But it sounds like blockchain is going to be a way to set up and set a system in such a way that it's going to say, this is exactly who you are. You're the one using this currency, and you're the one who transferred it from here to there. And this is the exact person who received it on the other end. Do you think that's going to pull apart the advantage of using digital currencies?
Yeah, so it's kind of, there's different types of blockchain tech. There's some that is fully anonymous, which in the sense that you can't actually see anything. And then there's full transparency on things like Ethereum. So when we say full transparency, you couldn't go and look at a wallet and say, I know exactly who that is, but you could try and decipher it. Or if you were someone who's used that wallet and connected to something that does have ID verification, they would be able to then go, well, hang on, we know that is you. And there's a lot of companies that are heavily focused on data mapping. So things like Chainalysis, who do a lot of work here in Australia with government and the banks, they have extremely good tech at actually tracking who they think owns what wallets based on a whole heap of different information. So, you know, anything from this wallet was connected to this centralized exchange, and we know that wallet was withdrawn to and it's owned by X, and then they can decipher things like, we think this other wallet is also them because of the transactions that have happened. And So there's certainly something to giving up by being on a fully transparent blockchain, which is the ability that everyone can see everything. It's kind of the price of transparency, and which is a really interesting debate in itself. Like that's probably, we can dedicate an hour to, transparency and is it a good idea and where is it a good idea and where is it not? And then you've got chains that actually fully mask everything that happens. And there's a couple of different versions of that. Some literally you can't see anything, but the transactions still have all the same attributes they would on any of the fully transparent blockchains, in that they're all secure, it's all immutable, so it still has all that value. You just can't see everything that's going on. And then you've got other chains that deploy more of a masking style. So there's this web of transactions where it's actually hard to decipher what's real and what's not real. So you can actually see everything, but it's very difficult to use something like a chain analysis to work out what's actually going on. Which are kind of the three different approaches. Like, I think what we'll probably see is people have the choice of when they want to be within an anonymous space and when they are happy to be within a public space. So I think a really great example is, publicly traded companies should be fully transparent in their financial transactions. I think that would be something, or charities should have everything on chain. You can actually see everything that's going on.
That's a really good point.
I think that's a really great example of where we actually definitely should. Personally, I would much rather not, unless I'm a public figure.
For charities.
No, sorry. Personally, if it was my personal account.
Your personal,
This guy's got some dodgy charities going on.
Personally, I would rather not have all my public transactions. I would not have people see when I'm buying coffee somewhere. I would not want all that sort of stuff, because that's also a way of, potentially physically tracking someone as well. So I definitely think we'll see a world where you can move between the two. So you can sort of enter this the black space, and then you can re-enter the transparent space. I think the argument against privacy has always been, well, if you don't want everyone to know you're doing something dodgy, I just don't think that's true. I think there's a lot of great reasons why you just don't want people to know what you're doing in your personal life, what you're doing with your money.
Traditional banking, you don't know that information.
No, 100%. And I think this is kind of the difference. The only people that do know it is the banks and the government. And then there's that's another hour debate about whether that's a good idea or a bad idea. But I think in general, I don't think anyone should have any access to any of my personal information unless I want them to. I think that's sort of a fundamental right that should be preserved. And so I think blockchain will have the ability, and we're going to have more of the ability to do that, to go, well, I'm happy for this to be seen, I'm happy for this not to be seen.
I'm sure the cartels out there are like, yes, more of this guy, more of this guy.
and look, this is kind of the problem is often that the narrative of it's, privacy is only for criminals in the financial sector in particular. I can understand that, of course, criminals want to be private, but it doesn't mean that it's something that we should abolish, because I think most private citizens should have the same right to be completely private, and if they did wish to. And a really great example is things like medical records are something that there's a lot of talk about being on chain, and you being able to actually provide access to your medical history or cut access off. Like that kind of stuff should 100% obviously be private. So there's some really, or your digital identity. So a really great technology that's being implemented at the moment is a company called Verida down in Adelaide. They've been building out like a single identity that you can reuse on chain. So if you actually go to like 5 different financial institutions, instead of having to redo your KYC, give them all your information, have them store it on some server somewhere, you can actually reuse a single identity point that's verifiable and provable without actually having to reshare all that information. So it's a really great example where instead of dispersing your, passport and your bank statements and a driver's license and all this other stuff across 50 servers across the world, you could actually just do that once. And though you still have a point of trust and a point of risk, it's a fraction of what it would be had you were having to do this 50 times over again. But it's a good example of, you still want that to be private. You don't want people to be able to go on and see all that stuff.
Absolutely.
Do you foresee a future? My mind always goes to doomsday example. Sorry, but
it does.
I kind of imagine beginning of the internet, the early days. It felt like it was like this free landscape that was a paradise for people if you know how to use it. But eventually, it became this place where nothing was free. There's almost nothing you could do on the internet without paying someone, and often very expensive price. Like even buying a website today. Back then, you could get it for a couple cents. And now someone got the idea, what if I buy up every single website? And now you don't get the opportunity to just buy a website. You have to go through me to get it. And I can charge you whatever I feel for it. Do you think the infrastructure, is there a risk in the infrastructure of blockchain in such a way that big tech could come in and just sort of run over it and own it and force you all to pay infinite amounts of money and defeat the whole purpose?
Yeah, so like the infinite amounts of money, not so much, but there is 100% risk here, and the internet is the playbook for that, which is the internet was very decentralized, and it was actually always intended to be decentralized, sort of very similar to what the blockchain philosophy is. Commercially, it became more efficient to centralize so much of the internet, which is what we have now. Is this far more centralized version of the internet? And this kind of also comes back to that whole self-sovereignty of your wealth, in that everything's a trade-off. If you say, well, I don't really want to self-custody all my wealth, then you've got a trade-off, and you actually have to have someone else have some sort of access to it, and they're going to want to charge for that, and they're going to want fees for that, and whether that is in the form of you keeping your money in the bank and they're taking the lion's share of the money they earn from that, or whether that's fees. So I think philosophically there's kind of a question here, which is, as a society, have we looked at what's happened and gone, you know what, we actually just have to accept that some things may not be as easy as we would like them to be, but we aren't then sacrificing by handing all the power and all the ability over to a small number of organizations. And that's kind of where we're at. So if we use like Bitcoin mining as a really great example, Bitcoin mining at the moment, most people participating for it to be profitable. I would say most of the Bitcoin mining power is about making money. There is an argument to say that actually shouldn't be the focus, because if it's all about making money, then there's always going to be a commercial side to this, where companies will just pour more and more money into it as long as it remains profitable, where you'll see. So there's a great example. There's some big teams building nuclear power around Bitcoin mining to make it as efficient as humanly possible to run miners, which means they will end up controlling a huge chunk of the Bitcoin mining power, because they'll have one of the lower sources of energy. If the world said, you know what, we actually don't need to make a profit because we believe we want to actually keep this system decentralized, so we aren't, forced into certain channels of using a network, which means we're actually happy for it to cost us $5 a week to be a part of securing the network. That's a very different circumstance, because if you're willing to do it and it actually costs you, it makes it less commercially viable for large organizations to control large segments of the market. So, that is a philosophical debate about sort of what people are happy to sort of give up as a part of being a part of anything like this. Are they happy to give up control and potentially relegate that to others and trust that they will do the right thing? Or, are they willing to take some sacrifice and to sort of shift things back into, this more decentralized and distributed and competitive marketplace? I do think a lot of people in Bitcoin have that philosophy, which is it's not necessarily about making money. It's about creating a system we think is better and fairer.
Sure. When it was cash, I could take $1 and I could buy something for $1. And that's exactly what it cost me, right? Now we're living in a world for Australia, which is almost an entirely cashless society. And banks know that, okay, you need the credit card now. So we will always charge you a percentage on every single purchase. Doesn't matter what it is. They're shaving a bit off the top every day. If we moved away from credit cards and we just moved into the direction of blockchain and purchasing everything, are we just running in the same direction? It doesn't sound like we're really solving the problem there.
Yeah, like I'll sort of give you my view on the cash problem and the banks too. I think it's a really great example where, as a society, we went, you know what, we're okay with banks sort of holding all our money, and we're going to trust this whole system. And as a part of that, they're going to offer this array of services which allow the system to function, right? Which included handling cash. Cash handling was never profitable for the banks. They didn't charge for it. It wasn't like a case of this was a money-making part of the business. It's a painful. You can imagine transporting coin from bank to bank in secured trucks. It's heavy. It's a nightmare. You've got to count it. It's an expensive process. So then what we saw was the banks go, oh, God, this is actually expensive. The world's probably ready for us to kind of force them down this channel of something that's better for us, which in reality will just increase our profit margin. So we went from going, okay, banks will accept that you're going to hold all our money and you're going to make money off our money, and that's all great. But as a part of that, you're going to make sure all these other things keep working, and it's a part of the cost base of doing business with us. And it's this sort of, this tiny incremental changes that are kind of the issue. Then all of a sudden one thing sort of cuts off, and that's because it's not that profitable. Hang on, it never was. And the deal wasn't that you were going to make money off handling cash. The deal was it was a part of an overall service offering. But it's these incremental changes that creep up on us. And this is kind of always the concern, is that these incremental changes seem very small at the time, and then over 10 or 20 years, all of a sudden it's like, oh, hang on, we've kind of pigeonholed, we've sort of backed ourselves into a corner here where now we're stuck with only digital transactions. We can't get cash. You go to the bank and you try and withdraw $5,000 and they want to ask you 20 questions and tell you you can't have it. Like, I think that's a really terrible sort of place to be.
Absolutely.
And it's all done from this this idea that we're protecting you.
Yeah.
And I just feel like it's just such there are exceptions, right? Where I'm sure it is protecting someone who actually is experiencing an issue where this is a problem. But I think for a majority of us, it's more that we shouldn't have to be asked these questions. This is our money. If we want to go and withdraw
I
the
just
money,
want
do
my
something
money.
with it.
That's right.
Yeah.
I can. And if I don't answer questions, that's not a red flag.
Yeah.
That's I'm allowed to have a private life and do what I want with my money, and you're not allowed to question that. And this is kind of the fear of where we head with this fully sort of digital world. So, from the bank's point of view, I can also get it if we're in a capitalist society where profits, which we've seen in the last sort of 40, 50 years, profits has become the key, and shareholders require profits, and mandates for most businesses are purely profit based. It's almost the KPIs are profit only. You could debate there's more, but it's almost 90% profit only, right?
Yeah.
So almost the fiscal responsibility for any business is to make as much money as possible, which is, the moment they can sort of really clearly justify and articulate why this is more profitable, it's almost a requirement to execute on, which is a fundamental problem, collectively, which goes back to that whole, would you contribute to a system at cost, or do you need to make money? And it all sort of ties into this same logic. Which is what's important, profit, or are we willing to trade off less profit for other values?
So do you think that...
I feel like we have got very philosophical here, so I'm trying
No,
to get
that's
straight
fine.
to that,
do you think that we're ready for this?
I think some parts of the world are. I think if you live in a first world, I think you should be ready.
Yeah.
I think if you live in a third world, your hierarchy of immediate demands or important things in your life, self-sovereignty of your wealth is probably not top of mind.
But even some of the European countries, like Italy, is still very heavy cash base.
Yeah, very.
Definitely, yeah. And I think there's a lot of people who still like the idea of the cash system. I think a lot of that, there's a lot of good reasons and bad reasons for that.
Oh, always.
But, I think collectively, if the world could come to terms and find a way to use this kind of technology, I think it's certainly a fantastic alternative. Regulations are certainly an issue there. What do the regulators say you can and can't do? Uber, I find a really interesting use case because I feel like it sort of came in, didn't actually meet the legal requirements, but the people were like, no, this is good. We like this idea as a concept. We think it's disrupted an industry in a positive way. Yeah. And we saw rules change. And what, I also think was quite unfair to taxi license holders. I know plenty of people who had them in things like super funds and all these kinds of things that essentially got burnt because they believed that the government would uphold what they've said they're going to do, which is in reality, we'll only do it as long as the people agree with it. But, the rules bend as needed. But, I'm hopeful that means with things like blockchain technology and the ability to bank yourself, I think would be great. And I'm hopeful that we actually see that happen. Whether we do or not is, probably 50-50, or whether everything still needs to go through these regulated on-ramps and off-ramps, or whether you can live a peer-to-peer kind of life, we'll see.
Even the taxi example here, I'm still wondering.
I am internally seething over the taxi. It's got nothing to do with anything, but the taxi Uber thing.
I'm kind of wondering though, we already have a mindset of what the risks are for blockchain and Bitcoin and all these other things. What are people not talking about that you're aware of that you feel like this is probably what we should be getting in front of before this becomes a bigger issue?
Yeah, look, I think probably the key risks, the fact that regulation has been quite slow. The US election probably is definitely going to have an impact on this because we're going to see the US, in theory, if we're going to be a lot more crypto positive. So whatever you think of the election, it's certainly going to be more crypto positive. What that'll mean for regulations, considering Australia often follows suit, I think will be interesting. I would suggest Australia was going to be more conservative. They may be less conservative.
Is that something you're excited about? Watching what the US do now this election's happened.
Yeah, I'm really intrigued to see what they do. I think that they were certainly far too harsh in their approach. There were plenty of really good operators who were actually trying to solve real problems and make it more accessible. So a lot of this also depends on if you think blockchain is inevitable. I obviously do. And
I
if,
tend to agree.
Yeah.
and look, if I was to describe it, someone actually put this to me really well not too long ago. They're a publicly listed company and they were looking at using blockchain internally, and we were talking about it. And the way they described it, and I thought this was a really great way to think about it, and I've tried to think about it in the same way, is they described, well, hang on, look, let's not call it blockchain. We want these characteristics in a technology, and laid out the characteristics. And the end of it, he goes, well, at the moment, it would seem blockchain is the thing that actually fits that the best. And so, you know, when I sort of refer to blockchain, I think all the characteristics that we're talking about blockchain offering now, which is very efficient, which is the ability to transact peer-to-peer, which is allowing trustless automation of a whole heap of steps that don't require third parties. Like all of this kind of stuff is stuff that I think is inevitable to come through in a technology. And at the moment, I would say blockchain is the technology. So if we sort of say it is inevitable, then I think the US's approach, which was extremely heavy-handed, was really penalizing more of the good operators than the bad, in that most of the operators that were within the SEC's reach were people actually going, you know, we're willing to be within this jurisdiction and work and try and make this a reality and actually bring this to retail consumers and bring this to the public. Whereas most of the people who probably, I would say, are more doing the wrong thing, try to keep away from the US jurisdiction and do everything they can to circumnavigate getting caught in that web. So I think the thing probably to be ahead of is we actually need good operators that are delivering quality, safe products to market. And the more we try to sort of sidestep the regulations and keep all this at bay, we're just allowing these sort of open windows for operators that aren't as good. And when I say as good, I think they aren't as safe. And that can be taken in two ways. They're dodgy operators, which is one, but I think the other really big piece is they just aren't as diligent on things like their security audits and building quality code and a quality product. Because one thing to be aware of is with the immutability and with smart contracts, if there's a theft or a hack, you know, that is a real loss. Whereas, you know, in things like a banking system, if there's a theft or a hack into the system, they can often reverse that. They can actually backtrack a lot of those transactions. They can reverse a lot of what's happened. Whereas you don't have those fail safes inside blockchain technology. If you steal $100 million out of a smart contract, that $100 million is in theory more than likely gone. And so having good operators that are very technically capable, that have the resources to build quality products that are safe is really key.
I'm not hearing the exact definition of like what a bad operator is. Obviously, it sounds like a hacker, or what types of regulations we should be focusing on right now. Like, what exactly is missing here that makes it unsafe in the event that someone tries to hack it?
So I think the unsafe is two things. You could just have bad, like as in fraudsters, like that, which is in every industry, right?
Yep.
So you could just have fraudsters. And then secondly, it's just poor quality products. So it's not necessarily even bad people then, you know, like that can be very good people trying to do the right thing. They just don't technically execute as well as they should. And in blockchain technology, poor technical execution can lead to massive issues, because if you poorly build a smart contract that holds $100 million, it's obviously much easier for someone to steal that $100 million than in a very well-written, very secure smart contract. So the reason that becomes an issue with regulation is, with good regulation inside Australia, there's a lot of incredibly good builders, incredibly good operators that aren't building in the space because regulation isn't clear.
Yep.
So some of our finest talent aren't building in the space because it's not easy for them to build in that space inside things like Australia or the US. So we're missing out on, you know, very, very talented, incredibly smart people who currently aren't adding their mind power, their brain power to these kind of products. And most of the reason why I sort of reference the taxis is it's because a lot of these products are very, very different to the system we have now. If using DeFi and doing peer-to-peer lending, like that is so far outside of what we have now as a system that it really is truly breaking the mold. So, you know, regulations wouldn't allow that in Australia right now at all. You certainly couldn't launch a peer-to-peer lending system in Australia under the current regulation, which means if they aren't being launched here, they're being launched in other countries, and then Australians can go and access them and use them, but they aren't being launched in Australia under Australian jurisdiction, under Australian laws, under Australian penalties, all those kinds of things. So that's the real issue with sort of regulation being grey and probably not very friendly currently.
Would the difference between a smart contract and a bad contract be, in a bad contract, I want to buy something from you. You say, okay, I will sell it to you for $100. And I go, good, here's $100. and then you just don't give me anything. You're like, thank you for the $100. I have fulfilled the contract technically. And a good contract would be something along the lines of, I want to buy something from you. You say it's $100, and I say, I will transmit $100 on the proviso that I have received these goods, or I have a shipping label that shows that these goods are in transit and they're validated that they're in the box, right? Like what exactly is the difference between a good contract and a bad one here?
The second example is probably closer, which is really that a good contract, and let's say every contract, like if we say optimistically, every contract's meant to be a good contract, which I would say is true. So let's say every contract is meant to be a good contract, or at least the platforms you're interacting with, they're intending to build good contracts. The contract might be, I deposit $100 and you're going to borrow it and provide X collateral, and the contract will verify it has enough collateral to lend you the $100, and that collateral is there and safely and secured, and you can't take your collateral back until you've repaid your loan. That would be what the good contract is meant to do.
Okay.
In the case where it's been a poor contract, there might be a loophole in there somewhere where a really great example would be, I can then go and say, I want to borrow $100, and the contract goes, no worries, you need to give us $200 worth of digital gold. And I go, okay, sweet. Here, I've got the $200 of digital gold, and I would like to provide it as security, and I'd like my $100. And you can trick the contract into saying, here, I've signed, but you do the balance as zero of what you're sending, but you saying you sent $200, and the contract thinks it's actually received $200 worth of gold, and it hasn't, and issues you the loan. So this is what I mean by, that's what a poor contract would be. The other sort of examples have been where you can trick a swap rate. For example, you might go, hey, I want to trade Bitcoin for ETH. And, one of the really common mistakes that have been in some smart contracts is just in the plain decimal places. Different assets have different decimal places.
Yep.
So some might go to 8 decimal places, some might go to 16. And there's been a few good examples where a new asset's been released. It's a funny number of decimal places, and the system doesn't read it properly and puts the decimal in the wrong place.
Okay.
So it's a really good example, and a hacker will find that and go, actually, hang on, if I can trick the system into doing this, I can actually swap $10 for $50 and do that 10,000 times in a row over 5 minutes. So that's a good example of a bad contract.
That's terrifying.
Which is not to freak people out.
I'm a little bit scared of using a contract.
Yeah.
But if you were someone who were doing a swap, for example, generally that's pretty straightforward, as in you're not as at risk as much there. It's more when you're locking up money within a smart contract that's where most of the risk would occur. Your other kind of risk where you're just doing a transaction yourself, such as buying something or trading something, it's more likely to be someone who's hijacked an interface, which is the same problem you have now with Web 2 as well. If someone's gone and hijacked Nike's interface and put a fake Nike store there and you're buying shoes, they're stealing your funds, similar as it would be within the blockchain space.
You're obviously mindful of all of these risks, but you're still pioneering change and building new technology and supporting the growth in the industry. What gives you the confidence? What makes you trust the system enough that you're willing to continually invest more into these technology sectors?
I think it's also, again, that piece of, I think this technology is inevitable, and I think it's a technology we need. I think the idea of me lending money to my neighbor for a home loan directly, where they pay a lower interest rate and I get a bigger share of the interest, I think that is a fundamental piece is good. I think that is positive. Or you want to sell some gold and I want to buy it, and we can do that with each other. I think that's a really positive piece of the puzzle. And especially since the technology will be able to provide that in a way that is incredibly efficient, it's not like we are stealing value from somewhere else. It's not like there's an additional cost layer that's sort of missing in there. What we're just doing is taking a system that's very inefficient now, that requires trusted parties in the middle, and removing the need for it and allowing people to retain more of that value. And I do think in the world we have now, so much of the value accumulates into certain pockets, and blockchain will make a lot of that unnecessary, which I think is particularly interesting. Sure. So I think it's more that the technology is inevitable. I think everything new like this has these same issues. This is not an oddity. Every time we've had any of these kinds of things done and built, the internet was always my perfect example.
Yeah, it really is.
It was the same pain points, it was all the same problems. So, that is why I think, it's not perfect yet, in the sense that it's harder for people to access. It's harder to verify what's a good product. And, you need more knowledge, I think, and have
Sure
a
do.
slightly higher risk appetite. But that's going to change.
We're heading towards, this has flown by,
Yeah, this is definitely flown
hasn't
by.
it?
Yeah.
Like, I just looked at the time and I'm like, holy cow.
Got 20 other
That's a
questions.
good thing.
Yeah, I know. I just realized I hadn't even like run through this. But I guess, so I want to get personal.
Oh God, yeah, okay.
Da, da, da. No, kidding. So you were named Queensland's one of 40 under 40. How did that come about, and how has that impacted the sort of the way you go forward? What did you get out of that? Can you talk us through how that went and how that felt and all the good things?
Yeah, yeah, I don't know. It's a good question. I hadn't really thought too much about this. Someone
now,
did.
on your feet.
So yes,
40 under 40.
someone
Go.
did nominate me. I didn't know who, and someone actually reached out and
Oh.
said, "Oh, I nominated you," and I was like, "Oh, well, that was really lovely of them," which was really nice. A good friend and a lovely guy. And so I sort of had no insight of even what it was at
Yeah.
first until the nomination came through, and then had to do a bit of an interview process and what have you. I also had no understanding of because it was the first year as well.
Okay.
So I had no real understanding of like who the past winners look like. Like I could see other states, so I didn't really know how we quite fit in the picture. You
Mhm.
know, like we're obviously very different to a traditional business.
Mhm.
But look, I think it was really interesting. It was a really interesting experience. I think it was also kind of nerve-wracking to be there and be like, if you don't win, you kind of got to sort of sit here and then go home. And
Yeah,
It kind of
just
feels
like
a
at
bit-
the Oscars, do the play. Oh,
I feels a bit
I'm
odd.
so happy
yeah,
for you.
yeah, exactly. So and again, because I felt like I don't know whether we are even the type of business that fits, you
Yeah.
know, what they're looking for these kinds of things. So it was really lovely to be recognised and to sort of win an award. I judge things like the Lord Mayor's Business Awards, and I judge a lot of other awards, and so I sort of like had some insight into maybe what the process might look like, but just didn't really understand what they're looking
How
for.
do you have time to do all this?
I probably don't, to be honest. Like I would say, my wife would say I definitely do not.
Yeah.
But you know, I think if you enjoy it, it's different.
It's
too,
not
right?
work, isn't
Yeah,
it? This
yeah.
is the old age comment. If you enjoy what you do, it's not work.
Lord Mayor's Business Awards are a really great example. Like I get to see what some of the best businesses in Queensland are doing, and get to actually look under the hood, which I find fascinating. I find it super interesting to see the innovations that are happening, what they're doing. You know, you get to hear about their strategies and how they're building their business. And, you know, I also take a lot from that. I learn a lot from that, and seeing, you know, how they're tackling challenges and is great. Is super interesting.
Okay. So to wrap up, if you had, and we ask this question of everybody, and I want to make sure I get the wording right.
You nailed it yesterday. You didn't even look.
I know. Panic. Okay. So if you were to give advice to, I can see his eyes boring into the back of my head right now. If you were to give advice, and you were starting your career again, and you were mentoring somebody else, and you were like, okay, this is the one piece of technology that I wish I had have used, what would that be?
Blockchain. Look, it feels like the obvious answer, doesn't it?
Everyone's default is AI currently.
Yeah. Well, hang on. We talking about as in today, what they
Yeah.
would be using?
Yeah. What would you use today? So you're talking to another going to be business leader who's starting their company. What do they have to use?
I think AI is probably a sensible choice.
Yeah.
Especially if you're an early stage founder, finding efficiency wherever you can.
Yeah.
Everyone who's an early stage founder out there knows you do way more hours than you think is humanly possible. Anywhere you could save time.
Yeah.
But the way also I talk about some of this sometimes is you got to remember a lot of the hours you save in the early start of your career is actually an extension of hours at the end of your career. So, you know, the more you get done now, and if you can get an incremental increase now, it's actually additional time at the end because you're further along in those last couple of years. So if you can save 2 years now, it's actually 2 years longer at the end of your career and at the end of your cycle, which, you know what it's like at the end of your career, the value generation and what you're doing, whether that be financial or otherwise, is exponential compared to when you start. So I think a lot of people don't think about it quite like that.
I've not thought about it like that.
No, it's true. Because if you save 2 years now, you're still probably going to work to the same age, especially if you're an entrepreneur. You generally are pretty driven to stay working. It's really 2 years extra at the end.
I'm a firm, but I always tell people the same thing. Just put the time in now.
Yeah.
what I tell you yesterday.
Yeah. Yeah.
It's easier said than done,
Yeah.
right? But
It is. It is. Yeah.
find
Okay.
something you love and it's easier.
It's exactly right. Like I'm a firm believer that like the last thing you want to be doing is when you're older, still on the grind. You want to kind of hope that whatever effort you invest early on will pay dividends later on, that will allow you to take a little bit more of your time and spend your time in other areas that are not so solely focused on making money.
Completely. And the other big one I think too, like if I sort of said one piece of advice, it would be focus.
Yep.
Yeah.
I think in particular, entrepreneurs are very much shiny things.
Oh yeah.
I still do it. It's a constant battle, but it's definitely pays dividends in a strong way if you can actually really focus. I think that's a really
Amazing.
Ritalin shares just skyrocketed.
I need to get me some of that. Thank you so much.
Pleasure. Thanks for having me, guys.
It's again, I can't. Like, I feel like I say this a lot. I can't how fast these go.
Yep.
It's mind blowing. But I was like, I was in there.
Good. I'm
You know,
glad.
I kept looking at me, going, "Why is she staring at me?
No.
It's a freaking weirdo."
I had to take a few notes at a couple points in time there. This has been the most informative blockchain conversation I've ever had with someone. So thank you very much
Pleasure.
for bringing that knowledge to the table. And I hope you have a wonderful rest of your day, mate. We'll see you again soon.
Thanks, you guys as well.
Thank
cheers.
you.
Appreciate it.
Me again. Don't forget to subscribe and hit that bell, and we'll see you in the next episode.
Thanks for tuning in to the Tech Panel. If you like what you heard, make sure to subscribe on YouTube and follow us on TikTok, Instagram, Facebook, and LinkedIn to stay connected. A big thank you to our major sponsor, TraftTrack, for powering today's episode. And join us again on the next episode of the Tech Panel, where tech minds meet.